that Federal Reserve Chairman Ben Bernanke has been confirmed for a second term. We're talking about the challenges that lie ahead for the Fed and for investors. Michael Gorham with the Illinois Institute of Technology and Rebel Cole of DePaul University along with us to talk about this issue. Welcome, guys. We appreciate it. Rebel, let me start with you. The Federal Reserve has definitely taken a lot of criticism for bailing out Wall Street, not doing enough for consumer protections and issues like that. Do you think that anything's going to change in Ben Bernanke's second term?
I think we're going to probably see a lot of the same policies out of Mr. Bernanke in his second term. I don't think we're going to see much fundamental change. We are definitely going to see interest rates heading north from where they are now. That's probably going to be the biggest change. On the bank regulation front, I don't see that we're looking at a whole lot of difference than what we got now. They haven't dealt with the too big to fail problem. It's actually, the banks have gotten bigger under Bernanke.
Michael, was Ben Bernanke the right choice for the second term as head of the Fed?
I couldn't be happier. Ben Bernanke, he's getting a really bad rap because he and the other people there dealt with an incredibly difficult problem. And the standard we should hold him to is not how bad the country looks right now, because he didn't create that. The question is, how well did he do compared to other people that could have been Fed chairman? And given his background, given the fact that he had spent so much time studying the Great Depression and other crises, I just think he was the right guy for the job. And I think it's sort of a cheap shot when you hear people say that he was fiddling instead of when he was working these 18-hour days during this incredible period of time. So, I think he did a great job.
Well, one of the biggest challenges that lies ahead for the Federal Reserve is the exit strategy. It's ending several emergency programs put in place over the past 2 years. The biggest one, of course, is the $1.25 trillion mortgage-backed security buying program that's ending in March. What do you think the Fed's going to do with all of the assets that it has bought, Rebel?
The exit strategy is the sort of the 500-pound gorilla in the room that nobody's talking about. We've got $1.25 trillion of mortgage-backed securities that the Fed has bought. It's ballooned its balance sheet by about 150%. We've gone from $800 billion to $2.2 trillion. And how are we going to get that off? That's high-powered money that has the potential for creating a great deal of inflation. I think one thing we may see is that money ended up on the balance sheet of Fannie and Freddie. Because certainly if the Fed sells those mortgage-backed securities in the market, housing mortgage rates are going to shoot skyward.
And one of the other big issues here is the question on inflation and what happens with that. Right now, inflation is still in check. Do any of you guys have any thoughts about whether the Federal Reserve can actually get it right when it comes to clamping down on inflation? Rebel?
I think that we've got two potential scenarios we're looking at going forward. We're either going to be looking at double-digit inflation or a double-dip recession. So the Fed's either going to have to start raising rates to combat inflation and sell off those mortgage-backed securities. Otherwise, they're going to keep rates low, which looks like the strategy, and keep those they'll probably even have to continue purchasing additional mortgage-backed securities if they're going to continue trying to keep mortgage rates low. So I think inflation looks as probably the most likely outcome in the coming year.
We know that, of course, the Federal Reserve is a big topic in Congress. It's considering all kinds of efforts to kind of question whether the Federal Reserve should keep its powers. Should it also be audited, Michael?
Well, one of the auditing itself might be fine. It depends upon what's done with the audit. A lot of people had no idea what the Fed even did before we got into this situation. And the Fed's always been a mysterious thing. It's been something run by people that were independent of the government. And the thing that I think we've really got to keep in mind is that when you look at countries across the world that have independent central banks and those that don't, the ones that do not have independent central banks can get into really serious inflationary messes. And in fact, the worst one now is this country, Zimbabwe, which I don't know if you can see this. It's upside down. You probably can't. But these guys, this is a $20 billion bill. And when inflation is so bad that you're printing this kind of thing, we're not going to get anything like that. I don't think Rebel even thinks that. But the independence is really important to prevent politicians from causing pre-election surges in economic activity.
Okay, we'll see what happens with the Federal Reserve. We appreciate your time. Michael Gorham with the Illinois Institute of Technology and Rebel Cole with DePaul University. Thank you very much.